These companies have ambitious growth plans in the liquefied natural gas (LNG) business and will create value through expansion. These are the LNG stocks for a Trump presidency, and these undervalued names are likely to surge higher. Cheniere Energy. Healthy earnings before interest, taxes, depreciation, and amortization, and distributable cash flows from existing LNG terminals and further expansion underway. ExxonMobil. Committed to make some big investments in the LNG business with a target to handle more than 40 million tons of LNG by the end of the decade. Flex LNG. A young fleet of LNG carriers with a strong order backlog that provides clear revenue and cash flow visibility. Let's dive in. Here are the 3 liquefied natural gas stocks to bet on if Trump retakes White House in 2024. Welcome to Timely Investment Research. With presidential elections around the corner in the United States, portfolios can be fine-tuned. It's worth noting that Donald Trump's chances of winning the 2024 presidential election have increased to 50%. Therefore, it makes sense to look at some sectors and stocks that will likely benefit if Trump is back to power. During the first term, the Trump administration had focused on expediting infrastructure projects, including oil and gas pipelines and LNG plants. If Trump assumes power, I would be bullish on the LNG sector. This video focuses on LNG stocks for a Trump presidency that are undervalued and can potentially skyrocket. I must add that LNG produces 40% less carbon dioxide than coal and 30% less carbon dioxide than oil. Irrespective of the election outcome, I am bullish on LNG stocks for the long term. However, if Trump is elected, the upside can be significant in a short time. Number 1. Cheniere Energy. Cheniere Energy stock has been in a tight range in the last 12 months. Cheniere Energy stock looks undervalued at a forward price-earnings ratio of 17 times and offers a dividend yield of 1.13%. After an extended period of consolidation, Cheniere Energy stock might be poised for a big breakout rally if Trump is back to power. As an overview, the company operates the Sabine Pass LNG terminal and the Corpus Christi LNG terminal. The business is a cash flow machine, and for 2023, Cheniere reported consolidated earnings before interest, taxes, depreciation, and amortization, and distributable cash flow of $8.8 billion and $6.5 billion, respectively. It's worth noting that CCL Phase 3 is under construction and is 50% complete. In the current year, CCL Stage 3 first LNG is expected. I therefore believe that cash flow upside is likely in 2025 and beyond. For now, a relatively lower distributable cash flow guidance for 2024 seems to be discounted in the stock. Number 2. ExxonMobil. ExxonMobil is another subdued name that's worth considering. The undervalued stock trades at a forward price-earnings ratio of 12.2 times and offers a dividend yield of 3.6%. With some ambitious growth plans related to the LNG segment, I am bullish on Exxon for the long term. In terms of expansion plans, ExxonMobil plans to double its LNG business by 2030, focusing on Asia. The company is targeting to handle more than 40 million tons of LNG by the end of the decade. ExxonMobil is also building the Golden Pass LNG terminal in Texas. Initially, the plan was to commence operations in late 2024. However, Exxon has deferred the timeline to the first half of 2025. The project has a peak capacity of 18.1 million metric tons per year. In another recent news, Exxon will be buying 1.2 million tons of LNG per annum from Mexico Pacific. With high financial flexibility and some big investments, Exxon is among the leading LNG players to consider. Number 3. Flex LNG. Flex LNG is among the top LNG stocks for a Trump presidency. It's worth noting that Flex LNG stock trades at an attractive forward price-earnings ratio of 11.4 times and offers a dividend yield of 12%. It's a good time to accumulate and hold for the medium term. For 2023, Flex LNG reported revenue and earnings before interest, taxes, depreciation, and amortization of $371 million and $290 million, respectively. It's worth noting that as of fourth quarter 2023, the company's fleet reported high contract coverage with a combined charter backlog of 50 years. Further, if options are exercised, the backlog will likely increase to 71 years. This provides clear earnings before interest, taxes, depreciation, and amortization, and cash flow visibility. Therefore, robust dividends are secure. Another big positive is that Flex LNG has a strong balance sheet with no major debt maturity until 2028. Further, the company had a healthy cash position of $411 million. With an attractive book equity ratio, the company is positioned for further acquisition of LNG vessels. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.